Good morning, dear friends. Today we'll discuss the permissible deductions in computing the income under the head income from house property. If you kindly recapitulate that at the beginning of the chapter, means when I just took my first lecture under this topic income from house property, I told you two specific things. Number one, the scope of income to be charged under this head. Means income from house property is defined under section 22 of the Act, and the computation of the total income is governed from section 23 to section 27. It means first thing is that section number 22 of this Act. Why I am just giving impetus to this section? Because section 22 is very important section. This is a section which defines the scope of income, means what income is to be included to be charged under this head. Section 22 means scope of income, scope of total income, and section 23 to section 27 they deal with the computation of total income. Computation of total income means how the computation would be done to be charged under this head. It means when we talk of the computation of total income, it means the sections, the various sections under this act, they provide for some deductions also, which are allowed to be deducted while computing the total income. So today we are just discussing about the permissible deductions in computing the total income under the head income from house property. So section 23 to section 27, if you also recapitulate that section 27, it deals with the deemed owner, and section 26, I think this section pertains to the co-owner of the property. When the persons, more than one person is the owner of the property, so they are called co-owners. So section 26 and 27, one is in respect to the deemed owner, another in respect of co-owner. So the balance is section number 23, 24 and section 25. So these are the basic sections which deal with the deductions which are permissible under the Act. So these three sections, they pertain to the various deductions, various permissible deductions, you can say. So section 23, section 24 and section 25. So these are the sections which deal with the various deductions which are permissible under this Act. So to start with, the first deduction which is permissible under this Act for computing the total income under this head is the municipal taxes. Municipal taxes, in our last lecture, we calculated how to determine or we can calculate the gross annual income. If you just recapitulate the gross annual value, it's a gross annual value. If from the gross annual value we deduct the municipal taxes, it means municipal taxes, it will be net annual value. So permissible deduction under the income tax for this head is municipal taxes. This deduction is pursuant to section 23 to subsection 1 of section 23, and this deduction is allowed on paid basis. This deduction of municipal tax is allowed on paid basis and not on the due basis. So the municipal taxes may be due on a part of the assessee, but he has not paid it. So as such, no deduction would be allowed for computing the total income. So this deduction is allowed only on paid basis, and this is allowed even if the municipal taxes paid by the assessee may pertain to the earlier years. Even if the taxes do not pertain to the relevant previous year, they may pertain to the previous years, still the deductions would be allowed. If the municipal taxes have been paid by the tenant, yes, this is a very important thing. If the municipal taxes have been paid by the tenant, then it will not be allowed to be deducted for computing the net annual value. So this deduction is very important, because municipal taxes, I just want to stress again, three things are very important. First of all, the municipal taxes allowed to be deducted are on paid basis. Once you have paid the taxes, only then it will be eligible for deduction. It is not based on the due basis, as it happens in the case of interest. For example, the interest on the borrowed capital is due, that would be allowed on due basis. That we will just discuss subsequently. Here, the municipal taxes are to be paid only on paid basis once you have paid the taxes. Number two, if these taxes have been paid by the tenant, by your tenant, you have not paid the taxes, your tenant have paid the municipal taxes, then you will not be allowed for such deductions. So it means SSC should pay the taxes himself. Number 3, even if you are just paying these municipal taxes in respect of the previous years, it means you are just paying the area of the municipal taxes, still they will be eligible for deductions. So this is first, deduction is permissible deductions, which is allowed in computing the income under the head income from house properties. So what can be the municipal taxes? What sort of form be there in terms of the municipal taxes? We'll just have a glance over it. The municipal taxes may be in the form of house tax, water tax, fire tax, scavenging tax, sewerage tax, education tax, and general tax, etc. But in this case, one thing is very, very important. Please note that the state education tax is not a municipal tax because it is paid to the state government. So education tax itself is a part of the municipal tax, but if the state education tax is levied, then it will not form the municipal tax. So these form of taxes, means house tax, water tax, they fall under the category of municipal taxes. So they will be allowed as a deduction under this head, municipal taxes, in terms of subsection 1 of section 23 of the Act. So the next deduction while computing the total income is that we will just discuss. The next one is, this is the deduction from net annual value, because first of all, gross annual value less municipal taxes, it would be your net annual value. So deduction from net annual value, there are two types of deductions. Number 1 is a statutory deduction under section 24A. First is statutory deduction under section 24A, and second is the deduction for interest under section 24B, means subsection B of section 24A. First of all, we will just try to see what exactly is section 24A, means subsection 1, subsection A of section 24. Statutory deduction or standard deduction, you can say. What exactly is that? That we will just try to learn. Every assessee is allowed a standard deduction of 30% of the net annual value. So whatever value comes here at this place, assessee would be allowed a standard deduction of 30% of this value. For example, this value comes at 30,000 rupees. Means the net annual value of a particular property, say 30,000 rupees, then the assessee shall be allowed a standard deduction of 30% of this value, means rupees 9,000. This value is with respect to the fact whether you have incurred expenditure or not. Whether you have incurred any expenditure, because the person, an assessee, owner of the house, may be required to incur some expenditure for repair and maintenance every year, for whitewashing, something like that. So this particular standard deduction is allowed to the tune of 30% of net annual value, irrespective of the fact whether he has actually incurred these expenses or not. So in other words, you can say the actual expenditure incurred by the assessee is ignored. Even if he might have incurred the expenditure more than that, for example, a particular assessee might have incurred expenditure of say 15,000 in a particular previous year. Even now, 15,000 shall not be allowed. He will be allowed a deduction of 30% of the net annual value. So that is not the standard deduction. Next deduction is on account of subsection B of section 24. Means deduction on account of interest on capital, that we'll just see. This is the deduction for interest on borrowed capital. This is a fundamental rule that deduction on account of interest on borrowed capital is allowed to the extent of simple interest. Number 2, this deduction is allowed on due basis. So two things are very important. Only simple interest is allowed on account of payment of interest on account of borrowed capital. Once you have borrowed the capital and this capital has been borrowed for constructing the house, then this deduction would be allowed on simple interest basis. And number 2, this would be allowed on due basis, which means even if you have not paid the actual amount of interest to the lender, still you will be allowed the deduction in respect of the interest which has become due. So these two things are very, very important. The next element, the next constituent under this head is the interest may be on account of, because this is very, very important topic. very important element in that. Interest may be for the pre-construction period. It means now the period of construction or the horizon has been divided. One is the interest for the pre-construction period and subsequently the interest for the period other than that pre-construction period. Now what exactly is the pre-construction period? We'll just try to understand this particular concept with an example. The general rule is that the interest on the borrowed capital for the pre-construction period is allowed prior to the previous year. Which means the pre-construction, the interest for pre-construction is allowed for a period, for a particular period horizon, for a horizon prior to the previous year in which the property has been acquired or the construction of which has been completed. We'll just try to learn it by an example. For example, a particular SSC has started his construction activity in the month of say April 2003. He has started his construction on the house in April 2003 and the construction activity of this house were completed in say May 2006. That was the starting period. It was the completion period. Now what would be the pre-construction period? The pre-construction period shall be reckoned from, please note it, it will be reckoned from April 2003 to 31st of March 2006. It means the construction period means the interest for the pre-construction period shall be allowed from April 2003 to 31st March 2006. Means that period would be allowed up to the period prior to the previous year. Prior to the previous year means the previous year starts from 1st April. Means the house has been completed on 2006. So is previous period for the assessment year 2007-2008 starts from 1st April. So 1st April 2006. So the construction period, the interest for the pre-construction period shall be from April 2003 to the period prior to the previous year. It means it will be allowed from April 2003 to 31st March 2006. So for this period, it will be reckoned as the pre-construction period, the interest for pre-construction period. This particular interest, whatever interest, that would be allowed in 5 equal installments. For example, the total interest comes around 1 lakh rupees. Then it will be allowed in 5 equal installments, means rupees 20,000 per year. And the first installment allowed shall be in the year in which the construction is complete. It means the construction has been completed during the previous year 2006-2007. So its first deduction shall be made during the assessment year 2007-2008. So to sum up, we can say where the property has been acquired or constructed with borrowed capital, the interest if any on such borrowed capital for the period shall be allowed for the period prior to the previous year in which the property has been acquired or constructed. Interest on pre-construction is allowed in 5 equal installments. And number 3, the first installment is allowed in the year in which the construction is complete or in which the property is acquired. So these things are very important for the pre-construction period. Now the next is interest on the borrowed capital taken for the purpose of, now it covers so many activities. For each of the activity, we will just see the treatment of interest, how it is taken into account for the purpose of calculating a computation of income. As per this class, interest on borrowed capital taken for the purpose of means you might have borrowed the capital and you may be paying interest, and that particular borrowed capital might have been taken for the purpose of construction, acquisition, renewal or reconstruction of house property. Then the deduction is allowed subject to certain conditions. Number 1, any interest paid or payable on fresh loan taken to repay the existing loan is also allowed. You might have taken some loan for the purpose of such construction but now you want to repay that particular loan. That situation may arise when the terms and conditions of the loan are not favorable to you and you want to repay. And for repaying the loan, you are also required to pay the interest. If this interest is going to be paid, this is also allowed because now you may be availing the loan from some other agencies. So this particular clause cover such situation. Interest on borrowed capital is allowed as deduction on actual basis. It means if you have borrowed the capital, then deduction will be allowed on accrual basis. Means whether you have paid the interest or not, it is immaterial. What is material is how much interest has accrued during the previous year. Interest on unpaid interest is not deductible. If you have not paid the interest and for the unpaid interest you are required to pay the interest, then in terms of the provisions of the income tax it is not allowed to be deducted. It means you have just made a default in paying the interest to the lender and the lender has levied the interest on that interest, then this particular payment shall not be allowed to be deducted for computing the income, and no deduction is allowed for any brokerage or commission paid for arranging the loan. If you have just paid some brokerage or commission or some amount to a person who has arranged the loan for you, then this brokerage or money, whatever name you give, that would not be allowed as the interest on borrowed capital. Another thing is that the interest on borrowed capital is deductible fully without any maximum limit. It means whatever interest you have paid on the borrowed capital for constructing the house, then it is allowed without any limit in case of let out property. Please mind it, this particular provision is only in respect of let out property. It means if you have just constructed a house and this house has been given on rent, it has been let out by you on rent, and this property means you have built up this property with borrowed capital and you are just paying the interest, then there is no limit, maximum limit on this. It means you will be allowed full amount of deduction in respect of the payment of interest, particularly in the case of let out property. That we'll just see the different situations subsequently. So the conditions which must be satisfied for the deductions to be made in computing the total income, as I told you earlier. Now the question is interest. What is the treatment of interest in the case of one house which is self-occupied? If you have got a house which is self-occupied, the amount of deduction is limited to 30,000. It means now the distinction has been made between two types of property. One is let out property, another is self-occupied property. I told you in the earlier case, if the property is let out and you have borrowed the capital, then there is no maximum limit. Means even if you have paid maximum amount, no limit has been specified under the Income Tax Act, the whole amount would be allowed to be deducted if the property is let out. Now the next question is, if the interest to be paid in respect of the house which is self-occupied by you, then the provision is different. In this case, the deduction is limited to 30,000 in one instance. Another is it is limited to 1,50,000 subject to certain conditions. So firstly, in respect of the one house which is self-occupied by you, the amount of deduction is limited to 30,000. However, this 30,000 can be enhanced to 1,50,000, but there are some certain conditions which are attached to it. First condition is that the said property should have been acquired or constructed by you with borrowed capital on or after 1st April 1999. So if you have just taken a loan and this loan has been taken after 1st April 1999, then the maximum amount of limit to be allowed as the interest on account of borrowed capital would be 1,50,000. Now again one more condition is attached to it. First condition is the 1st April 99 and such acquisition or construction is completed within 3 years. It should be completed within 3 years from the end of the financial year in which such capital was borrowed. It means you have borrowed the capital say on 31st October say 2005. You have borrowed capital on 31st October 2005. It means the first condition that is fulfilled. You have borrowed the capital only after 1st of April 1999. The third is you should have completed the house within a period of 3 years from the end of financial year in which the capital was borrowed. It means the end of financial year will be 31st of March 2006. That would be the end of financial year. It means you should complete your house within 3 years of this. It means latest by 31st of March 2009. It means if you just complete your house before 1st of April 2009, then you will be eligible. That means the total amount of deduction shall be limited to 1,50,000. So these are the provisions in respect of the interest pertaining to the house which is self-occupied by the assessor. Again, we may sum up for these conditions. 3 conditions are applicable. First condition is the capital is borrowed on or after 1st April 1999 for acquiring or construction of a house. If you want to miss these 3 conditions are applicable, then the maximum limit allowed is 1,50,000. Number 2 condition is the acquisition or construction should be completed within 3 years from the end of financial year in which the capital is borrowed. Number 3, the person extending the loan should certify that such interest is payable in respect of the amount advanced for acquisition or construction of the house or as refinance of the principal amount outstanding. It means you are required to furnish a certificate from the lender that such interest is payable in respect of the amount advanced. So if these 3 conditions are fulfilled, then the deduction on account of interest is limited to 1,50,000 in respect of the house which is self-occupied by you. Thank you very much.